Yeah, let's look at how patterns are constantly updating, evolving, and how you have to move with it. So for example, if we start with a basic head and shoulder, right? We start with a basic head and shoulder. Again, retail would be looking at this, right? A break and retest of the head and shoulder, and then a drop to the downside. Fine, that is completely fine. But most of the time, have you ever wondered why a head and shoulder breaks down and then just goes long? You know, there's a reason for this. So let's actually study how a head and shoulder can be traded. So a head and shoulder can start as a head and shoulder. It can break to the downside, but we really need to monitor how is price breaking the neckline. If it's very corrective and if it starts forming something like this, it then flips all of a sudden from a bearish pattern to now a very bullish pattern. And then what's likely to happen next? It rallies to the upside. And then you say to yourself, but it was a head and shoulder. It was at resistance. It was at a trend line. Why did it fail? It's because there was a bullish pattern that got updated right in front of you. And let's say the market now drops, forms a bit of a double top. On a double top now, it decides to drop a bit. And again, similar scenario. There might be a bullish pattern that's in play, a larger flag, as you can see, and then it rallies to the upside. And once it rallies to the upside, what's likely to happen next? We update the pattern. And now, what do we have? We've got 1, 2, and the potential third tap. And then it just completely melts from this larger pattern. And then you say to yourself, hold on a minute, the head and shoulder and the analysis that I had before was south, was for it to go down. I was in fact correct, but I got taken out. And why did we get taken out? For 2 reasons. One, there's a larger, most relevant updated pattern happening right here. And there's the composite man and the smart money concept trading in between these imbalances on the way up, on the way down, on the way up, on the way down. And we can follow the breadcrumbs by updating the patterns and making sure that our bank levels, our banker blocks, and our imbalances are up to date. So again, let's see what could potentially happen next. Price has obviously dropped really, really rapidly. It then rallies, it drops again, forms this bit of a bearish flag. You get involved in this bearish flag. And then what happens? Yes, it drops, but then it corrects and it could potentially just form a larger pattern here. And it just rallies, goes long, completes 1, 2, 3, and then it drops to the downside. And you say to yourself, you entered your trade on this flag, right? You put it on break even, and then all of a sudden you get taken out at either a 1-to-1 or a stop loss hit. But it's because we haven't updated the pattern. And now if we update the pattern again, what can we see? We can see this now potentially forming. It then drops to the downside. It then rallies, but obviously what would likely happen is in this point of interest, if we look left, there's probably going to be a banker block, a bank level, or an imbalance. Smart money are constantly leaving clues behind. They're leaving breadcrumbs, and we can identify them with an edge if we're implementing pattern structure. And again, okay, price rallies to the upside. And what do we see? We can see this particular pattern playing out, and we're expecting now a drop to the downside, whereas retail will see a 1, 2, and on the third tap, retail sell it. And what happens? The third tap fails, liquidity gets taken out, stop losses get hit, and then we get involved on the boomerang, and then it just drops to the downside. But it doesn't mean that price can easily just come down here just because there's a 1, 2, 3, and there's a third tap. What is the market telling us now? Maybe there's a pattern here we haven't seen. You see, maybe there's another bullish pattern, and all of a sudden it goes long. And then when it goes long, you know, you might say to yourself, oh, but I was expecting a buy scenario. Okay, well, let's update the pattern. Maybe there's a larger sort of parallel channel. As you can see, it breaks above, goes below, etc. So let's do some other examples. We can start with a basic double bottom. So again, double bottoms can start like this. The retail will see at the double bottom. Stop losses will be just below. And then what happens is the double bottom fails, and then it rallies. But it rallies for 2 reasons. Number one, there's a bunch of liquidity. There's a bunch of bank levels and banker blocks just below where retail are getting involved. It then rallies to the upside. But on the larger scale, there's probably a pattern we haven't seen. Obviously, it can break to the downside. Once it breaks to the downside, what can happen? Again, look, left shoulder, a head, and a right shoulder. Then maybe it could, reverse from the right shoulder, completely go long. But then we update the pattern to something like this. And now this double bottom originally was a bullish double bottom. Rita got taken out, liquidity stop fund. It then formed a larger parallel channel, which then dropped, completed now a right shoulder, which is valid. It's gone long now, right? But now there's a sell setup. And then what happens? We can now sell the market. It drops, makes a new high, completes a new low, pulls back, and now there's potential right shoulder. So then we sell the market. And where do we sell the market to? What does the books tell you? The books tell you from the head to the neckline, this is basically your target, and your target is down here on the break of the neckline, etc. But then if we update the pattern, we take a second just to zoom out a bit and reanalyze what is happening. Okay, there is a retail head and shoulder. It's playing out. Fantastic. We're currently short. We're short. This is our target, right? Because there's maybe a support here. There's maybe a Fibonacci here. There's maybe a moving average here. There's maybe a trend line here. There's maybe another trend line here. There's maybe another indicator here. And this is your target. Retail's expecting to ride the rally down, only to realize that price does this and it completely reverses. And you ask yourself why. Again, there's maybe a potential bank level that we haven't seen, or a pattern that we haven't updated. So this is why it's important to implement and follow price action pattern with smart money concepts. That is going to give you a solid edge. Now that price again can rally to the upside, what could potentially happen? Maybe there's a pattern here. Look, there's a bit of an expanding pattern. It then drops to the downside. And then we can just continue trading this way. And what do we see? A rally, a break to the downside. We're expecting a retest, right? So there's a brick of structure. Where else can we see? There's maybe a pattern here we haven't seen. Then, okay, it might drop. Then it might just go long again from here. And if it goes long from here, then is there any other patterns that we haven't updated? Again, we don't know, but we can follow price using and utilizing price action pattern structure with smart money concepts, which I'm going to get into in some of the other videos.